Hi there. This is Monday Moment with Quinn. Hey Dion, how was your weekend?
Hey Quinn, fantastic weekend. Lots of time in the swimming pool.
You want to hear the funny story? Okay,
Yeah.
so over the last little while, I've been trying to find ways to de-stress, right?
Okay.
So I started looking for new hobbies or whatever. So I decided I was gonna cross stitch. So my first cross stitching experience came out like this small, like it wasn't very big.
Okay.
Like came out really well. It was just wording. So I'm like, okay, I'm gonna give it another try. So I ordered from Amazon,
Okay. All
right?
right.
So I'm like, you know
Kit
what? It
ready to
can't be
go.
that hard. Because, in my mind, I'm thinking that it would come like one of those coloring book things where it tells
Mm-hmm.
you what to do. This is what I got in the mail.
All right. Just go for it.
So, yeah, I'll let you know how it goes in about a year or two.
No, next week you need to give us a progress update. I need you to hold that thing up next week.
Yeah, and it'll be exactly this. Because I'm not even sure where to start. I look at it and it's like it's a mess of stuff. Like what do I do with this?
Oh God. Yeah, that doesn't look
Right?
good.
So
Right.
let's see how it goes.
Okay. Good
But
luck.
anyways, yeah, for sure. I'll give you a progress update. Give me about a year or so to figure out,
Okay.
because I'm not an artist, so we'll see. It's going to be interesting for sure. So one thing I want to touch up on today, if we could, was okay. So let's have this scenario. First time buyer, what do they need? Like if they
Okay.
wanted to say, like let's say they have first scenario, let's say 5%.
Okay. Yeah.
And they want to go shopping.
Sure. Okay.
What do they need as a
So
mortgage side?
yeah. So what a first-time buyer needs is pretty much what everybody needs, but there might be some other things. So let's talk it through. What the three criteria, and I'm just going to try and simplify it. When you go for a mortgage, there's three things, three key things that the bank looks at. Number one is your down payment. Number two is your income, and number three is your credit. Okay, so it's kind of like if you imagine those a triangle with those 3 points on it. Okay, so let's start with down payment. Okay, so down payment, as we all know, that can come in the form of savings. As a first-time buyer, or not even as a first-time buyer, somebody who hasn't owned property for more than 4 years actually qualifies to be able to access their RRSP funds for utilization as down payment through the home buyers program. So if you have money in RRSPs, retirement savings plans, you haven't touched it, you're able to access those funds for down payment. And many of our clients do that, especially the first time home buyers. So down payment's one component. Income. So as a quick rule of thumb, you can generally borrow around about 4 times your income, maybe a little more, but we'll call it 4 times your income, um, assuming that you don't have a lot of other debt. Okay. So if you came to us with $100,000 income, it would be safe to say that you could probably borrow somewhere between maybe $450,000 based on $100,000 income. Okay. Now, the last point is then credit. So that relates to the amount of money you can borrow because number one, there's two components of credit. One is what is your credit score, which comes down to how good are you using credit? Are you using it well? Have you had any missed payments? If you've had a lot of missed payments, then it's likely your credit score is not strong. And if that's the case, it's unlikely you're going to qualify for a mortgage. And if you have good credit, but let's just say there's a husband and wife, and each of them have a car with a payment of say $500 each on their credit bureau, that then negatively impacts that number in terms of how much they can borrow. So if they were on track to be able to borrow say 450, because of those two car payments, they now maybe drop to say 350. So your credit utilization and your other monthly debt obligations do impact your top borrowing number. So yeah, that's the quick summary of the three main criteria. Generally, people come to us and they're strong on two, but they're weak on the other, and we might have to give them some pointers in terms of how to work on those things.
And then what happens if, let's say, the deposit amount is coming from, like, as a gift from a parent?
Yeah, gifts are totally acceptable, and it's very commonplace. So if there is a gift, there would just need to be, generally speaking, a letter that's provided to us by the institution, the bank that or the lender that you're ultimately getting the mortgage from. They would have a template letter that you would complete together with the person gifting the money. If it's a smaller gift below the value of $50,000, then all we generally need is the letter. Beyond 50,000, sometimes the lenders want to see the actual source account. That is, let's say it's parents helping children. They might want to see the parents' bank account confirming that the money did come from an account owned by the giftor. So that's
And
sometimes one extra step.
uh, and what happens if the parent is not in Canada?
Yeah. So it's going to depend on the country, but for the majority of countries, it's acceptable. We would need wire transfer documentation. So it's more documentation needed in the source country as well as in the receiving country, Canada. And then they might need to provide their bank account from, let's just say they're in England, they need to send their English bank account history, confirming that that money was their money, or the parents' money in that example.
And does it have to be it does have to show an account for X amount of days or X amount of months prior to being able to use it?
Uh, so I guess a lot of people hear the number 90 days, but the answer is with gifts, no. Gifts can be done as long as it's a reasonable time before closing. I would say at least 10 days before closing. Gifts are acceptable up until that time.
Oh, perfect. Thanks for clearing that up. Yeah, because you keep hearing the 90 days, which is something that that keeps floating around. So it's always nice to know that what the actual number
Yeah,
is.
I
So
can
if it's
clarify
not,
that. I can clarify the 90 days. The 90 days is needed for any bank account that you're using for down payment. So let's just say you have a checking account and a savings account, and they each have $10,000 in them. Well, we would need to provide 90 days history for each of those accounts. And they're going to look at the history, and they're going to look for any large deposits. So if there's regular pay, like you get paid $2,500 biweekly from your employer, that's fine. But if there's a random $5,000 deposit that drops into that bank account in that 90-day history, we then need to explain where that came from. And it might be from the sale of a car, or it might be from the divestments of some kind of assets or investments. So just know that if you, in that window of 90 days on your statement, if there's anything, generally the number is over $2,000 that is not regular income, we need to explain where that money came from.
oh, okay,
Mhm.
right. And is that something that change? Do you see a change in that over a course of like, a couple of years, or is that something that has been
That's pretty
regulated?
much been the standard for many years, in fact, in particular with insured deals, which are, people putting down less than 20%. It's really an insurer rule, not just a lender rule. When you're putting 20% down, some lenders only need 30 days history, not 90 days.
Oh, okay, good to know. Good to
Mhm.
know. And that 20% could then, let's say, for example, 100,000 showing from a gift from out of the country,
Yep.
then you would need to explain that, right?
Yes, exactly. That's where we would get the wire transfers and the maybe the parent's origin account from the country of origin, right?
Oh, okay. Sounds good.
And Quynh,
Well,
I'll mention one more thing. So we talked about gifting of down payment. The other thing that is very commonplace now is that parents are co-signing with their children to purchase properties. So we might have a young couple who make $100,000, for example, but they need to be able to purchase for more than what they can qualify for, and they know they can manage it because they're good at budgeting their money. And so maybe they'll have their father or mother co-sign, or a sibling co-sign. And whereas before they were qualified for a mortgage of say 450, now they might be able to go for 550 or 600. So I'm seeing a lot of that, especially in the major centers where price points are higher and people are needing to get assistance from family.
absolutely, and especially in a GTA, we're
You
seeing
bet.
that. See, right?
Yeah.
Thank you for clearing that up.
Yeah. No
Busy
problem.
week ahead.
Oh yeah, always busy. I think when the sun is shining, our business gets busier. People are willing to get out and get active and look at property. And I'm
Yeah.
definitely seeing, we've had a couple of purchases over the weekend that we're processing right now. And even though this week is a short week with Canada Day, it's going to be super busy.
Yeah. Are you taking some time off for Canada Day, or taking the day off, or?
Oh yeah, I'll be in the pool with the kids and probably trying not to light myself on fire with some fireworks.
Okay, try not to.
Yes.
All right. Well, thanks so much, Dion. Yeah, as you mentioned, happy birthday, Canada. And
Yes.
yeah, have a really good week. Everyone, make it an amazing week, and we'll see you next Monday.
Yeah. Happy Canada Day, guys. See ya.
Take care.